Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on 6th of March 2021. Now, before I switch over to my screen share and walk you through a lot of the charts and I guess try to answer a lot of the questions that I'm being asked at the moment with regards to the declines that we've seen in technology, certainly have we found a bottom in technology? Well, I have some charts that would present some data that would say to us possibly the wider market, the S&P 500, the rotations that we're seeing from growth into value, what does it all mean, where's the strength in the market. As always, I have around 20 individual names that I think you should add to your radar for the forthcoming few weeks. And of course, if anybody has any questions, thoughts or comments, then please do comment below and I will do my best to kind of get back. But the one thing that I would like to impart to everybody is that I am not a day trader. I am not a day trading short-term time frame kind of guy. My time horizon is generally weeks to months. I think most of you that follow this small channel probably understand that. I only upload around once a month. I've got no wish to be the next technical analysis guru or anything like that. I just like to kind of put my thoughts out on social media, and hopefully you get some value from this. But let's dive into the charts. Let's see what the market's telling us, and let's try and figure out where we need to be allocated. Now, before I get into the charts, please do pause the video, make sure you're comfortable with that before watching any further. It basically says that there's not any investment advice, and please do your own due diligence. I think most of you that follow me already understand this. I'm working my way towards my chartered status, the CMT Association. Huge deal. Technical analysis is something that I'm widely known for, and if you do get some value from this, please do subscribe to our channel, give it a thumbs up, share it on social media. It all helps to get the word out there. Now, I think where I want to start is to spend perhaps 5 minutes walking you through the overall market. Then of course I will get into all the individual stocks and all the individual names that I know that most of you are looking for. But it's very important to look at technology at the moment. Now, what I wanted to highlight is certainly the support and resistance levels in the basic charts of the triple Q. Now, of course, there's much more to it than this, and I will try and share as much as I can. But from my perspective, I use support and resistance. I don't use little thin lines. Support and resistance doesn't work like that. Support and resistance is an area of support and resistance. And what I've observed, of course, over the last couple of days is a bit of a loose support level at the prior highs and from September 2020. Now, for those of you that caught my analysis that I put out, I think on maybe Tuesday, just regarding the declines in the market, what I essentially communicated to our clients last week was that this is a very logical level where we would find support for technology. Now, ultimately that has seemed to have played out. Of course, been massively volatile. Individual names have been cut in half, but it does look like we have a bit of support there in the triple Qs. Now, a lot of you won't have charts like this. This is professional grade software. I'm obviously a professional analyst, but what we're looking at here is the triple Qs relative to the S&P 500. And it's very interesting to me that we've also found support on a relative basis. Now, what does relative mean? Well, the way that I use these types of charts is exactly the same. It gives us kind of support and resistance for the individual areas of the market, the major indices, etc. And I'll show you how I use it in a second. But this would lend weight to another level of support for the triple Qs. So provided this ratio chart doesn't break down, which if it does, then I think it's a problem for technology. I think that there's a bigger problem on the horizon. But provided that we hold these levels, then I think technology, there's every case to be made that we've found a potential bottom for some of the technology names. I have started to move into some names on Friday, and of course if there's any disclosures that I need to make about existing positions, etc., or any positions that we've recommended to our clients, and I will do so. But it does look like we've found a bit of support. Now, I use relative charts like this to help me anticipate where the outperformance is going to be driven in the market. And this is a relative chart of the small caps, the Russell 2000, relative to technology. When we look back to August 2000 and to when the small caps started outperforming, for those of you that follow the channel, I've been banging the drum on small caps since last September, and of course we've had a massive outperformance recently. Of course some names have been cut in half, but that's what you accept when you take on the high beta and the small cap names. They're great when they're going up, when they're going down not so much. Again, similar with financials, it's not a surprise to me. Again, back in October, November, I was banging the drum on financials. We had a failed breakdown on a relative chart, and of course we've had a big outperformance from financials since then. So that's how I use the ratio charts, and I think there's an application to be made for technology at the moment. Now, when we look at the S&P 500, I've had big concerns about the failed breakout. For me, it's oftentimes an early warning signal. For those of you that caught the analysis during the week that I put out there, it does seem that we've found support at a level, 50-day simple moving average. It looks like we've had these little excursions. So if we can get a follow through day, which we did not get on Tuesday, then I think that the market is back up and running. I think we've had the correction that everybody's been calling for in technology, and the S&P 500 should hopefully, if we get a follow through, I think the market should hopefully then start to go and test its all-time highs again. Very interesting to me that the Dow again found support. We did not close below the 50-day simple moving average, and again it looks like we've broken back up above key levels. So I'm very optimistic on what we might see next week. We will know more, of course, Monday, Tuesday, and for those of you that know me well, I reserve the right to change my thesis on 30 seconds notice, because that's the market, that's the game that we play. So any charts that I'm presenting today, there's every chance that come Monday, Tuesday, I've changed my mind. So that's something to definitely bear in mind. Now, when we look at the US dollar index, which is driving everything at the moment, I want to highlight the inverse correlation that I've been highlighting for months. It's no surprise to me that the US dollar is ripping higher, and we've had a bit of distress with the S&P 500. So that's the bear case. I think that the bear case really looks like, well, if the US dollar index rips higher, then the S&P 500 is going to plummet. But what you have to understand is that these inverse correlations can be removed at any time. The market does what the market wants to do. Now, I'm getting asked a lot, well, Sam, that's all good and well, but what about this move into value? Now, the 10-year Treasury note yield has obviously been the buzzwords of financial media for the last couple of weeks. It has broken higher, and I think sometimes a chart just shows things much clearer. The bond market is obviously taking a bit of a hit, a bit of support here, but what I do understand is that if the 10-year Treasury note yield is moving higher, that's an environment where growth names come under pressure and there's a move into value. Now, this is going to be very difficult, I think, for many who have over the last few years had a massive performance in growth names. I think we can all hold our hands up and say, yep, it's been great. But what you have to understand is that when we get this rotation and this move back into value, value names can become the new growth. And that's exactly what we've seen with some of the energy performance. And I think, again, I'd like to highlight a chart. And this is value versus growth. And again, this is one of these relative charts that help me to understand what is likely to outperform. And if we're above the 2000 lows here in this ratio, then value is likely to outperform growth above that level. Now that's not to say it couldn't break down again. Value and growth can go up together, but what I'm looking for, and obviously what my clients are looking for, is outperformance. Yes, you can get the growth names that continue to steadily go up, but if we're looking for outperformance, then value is at the moment where the data suggests that we should be looking. And of course, we've had volatility this week. It has tailed off a bit on Friday, so putting it all together, I am quite optimistic going into next week. But of course, we'll know more when the market opens on Monday if Friday has just been one massive, giant, I guess, fake out. So again, we'll see. Now that leads me on to around 20 individual stocks that I want to highlight for you this week. Now I have a mixture of technology, energy, financials, growth, value. It's all in there. I think there's something for everyone. But like I said at the start, if there's any disclosures that I need to make regarding any positions that I currently own, then I will do so. This is one of those stocks. I'm going to kick it off with Magnite, MGNI. Again, this is a stock that I've done very, very well on recently. When we get these declines in technology, I use technical analysis to help me with support and resistance levels. And given a stock that I like has declined nearly 50%, what I'm always looking for is the risk to reward ratio. There always has to be a point where we say that we're incorrect with our thesis. For me, I bought in on Friday on this decline, and obviously we've had a bit of a rebound. But for me, it was very easy to make the case that if we break below this level, then my bullish thesis is incorrect. So there's always a point for me where I say I'm wrong. And for me, if we break below this level, then I am wrong. But I like the risk to reward proposition. It's very hard to ignore. And of course, 80% upside, cannot ignore that. Amazon, again, above 2900. Some of you might have seen a chart that I actually put out to social media around a week ago, saying that if Amazon breaks below the 200-day simple moving average, then this is a logical level for support. Now that's exactly what we've seen. But what I wanted to highlight with Amazon is there are better charts out there. Amazon is breaking down relative to the S&P 500, which means that it is underperforming the S&P 500. There are better stocks to own. That said, Amazon has held up reasonably well in comparison to a lot of the beaten up tech names. Certainly if you like Amazon, I think you can remain bullish above 2900, and it's probably offering opportunity, but there are better stocks out there. Disclosure, I own Antero Resources. I think we're very, very close to breaking out above the $10 round number. Again, I've highlighted this a few months ago on this breakout here. It's been doing very, very well for me, and I hope that we get a breakout above $10. And rather than perhaps sticking to my trailing stop loss that I have, I will probably start to inch up the stop loss, maybe $9.50, something like that, if we get a breakout above $10. Again, going back to the discounts in tech, I like Trade Desk. I think it's a great company. We've had resistance at $1,000. We've had a massive pullback. I think what we've had here on Friday is a signal bar. That's a bar that tells me there's a lot of support there for the stock. And if we can get continuation on this, then I think Trade Desk is probably off and running and will hopefully go back and test its former highs. Square, another great company. Again, support resistance. We've had a bit of a test of the former declines, and I think we found support around $200. I think as long as we're above this level, I think you can remain bullish, and Square is probably one of those that offers opportunity. Now, disclosure for ConocoPhillips, this is a stock that I both own and have recommended to our clients in the last couple of weeks. It's doing very, very well. Again, going back to the energy theme and the outperformance that we've seen with value, these energy names, do not get mistaken, these can move 5, 10% a day also. And I think pullbacks and uptrends offer opportunity. So I think ConocoPhillips makes a lot of sense for many, many reasons. Avalara, again, looks to be in a very obvious trading range at the moment. Now, I do not mind the risk to reward propositions on stocks that are trading at the bottom of the range and you can take them to the top of the range. And I think with Avalara, there's around 28% upside, and there's a very easy get out. If price starts to break down, then you don't take any chances. But you know, if we're above these levels, I think you've got to like Avalara. ExxonMobil again plays into the growth versus value theme. Again, I think pullbacks and uptrends, very similar to ConocoPhillips. I think it offers a lot of opportunity. Very interesting. I get a lot of questions at the moment regarding the economic reopening plays, etc. I'm always using support and resistance and obviously technical analysis. And I think MGM, provided that we're above this level around $34, $35, and I think you can continue to be bullish on MGM. Again, if it starts to break down, perhaps not so bullish. CLDX, the stock likes these bases. I like bases as well. Breakout, looks like we're putting in a possible retest here. Thing to bear in mind is with biotechs, there is obviously an increased risk attached to that. But I think technically, putting in a potential valid retest, and if we get continuation on this, then CLDX is probably off and running there. Carnival, very, very straightforward chart. I think again, looks like a potential cup and handle pattern. And it looks like we're pulling back, got a bit of a signal bar. So if there's continuation in the market, and certainly with Carnival, it's probably offering some opportunity. Now, I've been asked a lot about Plug Power recently, and one of the reasons I think I've been asked a lot is because this is a position that I've owned for quite some time. And what I want to highlight is the use of the trailing stop loss, and there has to be a point where you say that, do you know what, let's cut and run, let's take our profits. I automate my process, so when my trailing stop loss is hit, which in this case was around $55, the stock, just goes off the radar. Thank you very much, Mr. Plug Power. Let's go on to the next one now. It's obviously declined. We've filled the gap. And again, I think if you like Plug Power, there always has to be a point where you say that you're wrong. At the end of the day, it's the market is really a game of, do institutions want to own this stock? I mean, they're the ones that are driving the market, the big money allocations. And yes, I understand Plug Power is a decent company. The clean energy game has been utterly incredible over the last 6 months, but this tells me that the institutions, the big money, is just these types of stocks are falling out of favour now. If you like Plug Power, I think there's a case to be made that you could possibly buy the dip given the price has been cut in half. But for me, again, there has to be a point where you say that we're wrong. And for me, if you break below these levels, I think that's the bear case for Plug Power. But certainly I like the company because I've done very well on it. But I don't get married to any individual stocks. I think most of you know that I prefer dating them. And that's really the way that I look at the markets. Nuance Communications. Again, I understand that with failed breakdowns, we can get fast moves going in the opposite direction. And that's something that I'm looking for here with Nuance Communications. Very tight trading range. I do not mind buying at the bottom and selling at the top if swing style trading is for you. Visa, very frustrating stock, I think is fair to say, over the last couple of years. But again, I think if we can get a breakout above 221, that could be a catalyst for Visa to really get a move on. Snap, Now, for those of you that maybe caught the analysis a couple of months ago, I highlighted this level here as a potential profit target level. That's ultimately what's happened. But what I would say is this is not a coincidence that price has found support at a level that you would, well, certainly I would expect it to find support. So I think you can continue to be bullish on Snapchat, provided that you're above these levels here. I think Snapchat, you know, it's not something that I use. I'm way too old for that now, but certainly it's one of those names that I get asked about a lot, and that's my thoughts on the chart. Apple, again, disclosure, I was obviously on the stock. I think most of us probably have exposure to it in some fashion. This is one of those stocks that I'm happy to own at any price. If this declines, I don't really care. I'll be holding this for a while. But I do have a little bit of concern if it breaks down on a relative basis. Very similar to Amazon. It doesn't mean the stock can't go up. It just means that there's better stocks out there. Ultimately, I would like to see Apple resolve itself higher here from these support levels. But ultimately, it's a stock that's moving sideways. It probably needs some kind of news catalyst to really get going. Going back to the bottom of the range to the top of the range theme, which is, you know, it's a style or a play that you're going to get a lot of at the moment because of the declines that we've seen with the market. But I think as long as we're above these levels, around 130, I think you can continue to be bullish on Nike. And of course, there's a very obvious target there. Now, going back to, I guess, the cryptocurrency theme, what I wanted to highlight, because I got asked a lot of questions over the last few weeks about Riot blockchain and Mara as well, and all the cryptocurrency plays, which we've been super bullish on this breakout here. And of course, it's done very, very well for many of our clients. But what we've seen here, this is a Fibonacci chart. I would urge any of you that don't understand the 12th century mathematics and how key it is to the whole process. You know, we can see that the Riot blockchain just hits these levels, rebounds, falls away, rebounds again. I think we've pulled back. Now, again, this is a stock that's pretty much been cut in half. And I think if you are bullish on cryptocurrencies, if you are bullish on the blockchain game, you know, stocks that decline nearly 50%, you have to take notice. Going back to the MGNI chart, I think you certainly have to work out your risk to reward propositions and, you know, what makes sense. But again, I just urge you all, identify these areas where your thesis is incorrect, because that's what ultimately causes a lot of the pain and the bag holding. You know, I've seen cases where girls are bag holding for 3-4 years, and that's not a place that I ever want to be. UPS makes sense. Again, bottom of the range to the top of the range. MasterCard, very close to breaking out above $370. Again, we're going back to 12th century mathematics. Again, I think above 370 is the level there. Switching over to the financial theme, I'm told that this is a good company fundamentally, a good bank fundamentally. Again, breakout, we've pulled back to the 20-day simple moving average, and I think if we can get continuation on First Republic Bank, then I think that's a buy as well. Gap, I have no time for their stores or their clothing, etc. But I do like bases. I like the stock. I like, you know, stocks that are breaking out of these bases. They tend to do reasonably well. So, you know, if Gap isn't on your radar, you might want to start doing some due diligence. Hilton, I think pullbacks and uptrends offer opportunity. Again, going back to the base theme. We've been looking for a retest. We actually communicated this chart to our clients last weekend. It's done as expected. So if there's continuation on this, I think Hilton is probably a buy at this point. We've also communicated One Oak, OKE. I don't know how to pronounce that, but again, it comes into the kind of the energy value theme. Big dividend on this one, and above $50. We like it a lot, and you know, we're not complicating things. We like stocks coming out of bases. Sabre Corp, bullish above $13. Again, I am noticing a bit of short interest on this. But again, you know, if we start to break down below these levels, it's not, you know, it's not a place I really want to be. So I'm bullish above 13. There's quite a high short interest on it. So, you know, if you're bullish on Sabre, I think it's a decent place to be. United Airlines, potential cup and handle pattern. Of course, big declines on Friday before a rebound, like most names. But again, I think if we're above these levels, above $50, I think you have to be bullish on the airlines. Caterpillar, again, we've communicated this one to our clients on this breakout here. It's done brilliantly so far. Yes, it's had a pullback, but again, this is not a coincidence to me. It's found support, a logical level of support, and then rebounded. Pullbacks and uptrends offer opportunity. So again, I think if you're bullish on Caterpillar, it makes a lot of sense. Risk to reward on NVIDIA. Again, we're in this massive trading range. We're at the bottom of the range. We've closed above the 200-day simple moving average. NVIDIA's probably a buy if we get continuation on this on Monday. And very similar play, almost identical chart with advanced micro devices. So that really is the analysis that I kind of wanted to cover with everybody. If you found any value from that, then again, like I said, please do subscribe to our channel. Let me know what you think in the comments. Did you enjoy it? Is there any stocks that should be on the radar? To the other end of that, if you are somebody that perhaps struggles a little bit, perhaps don't understand technical analysis, maybe you want to learn technical analysis, feel free to jump on to our website, honeystocks.com. We provide technical charting research. We provide our membership, our 12-month membership. What we provide with our membership is very similar to what you've just watched. We provide our premium weekend analysis. We provide a halftime analysis, which is a smaller 10-minute analysis every Wednesday. We provide trade ideas. We provide a trading community. I also provide charting support day to day. But I think the big thing is we have an education first policy. So everybody that I guess joins our membership, you get full access to our technical analysis program. It's been built from the ground up, and I'm told it's exceptionally good. So if you are somebody that would like to learn technical analysis and perhaps add it to your process, then you get access to that with our membership. But what I will do is show you what we provide. This is what a typical trade idea looks like. I'm very unique in what I do because I also log all my trade ideas that I'll walk through that in a second. But this is obviously the original alert that went out for MGNI. Obviously it did very well. Plug Power recommended it above 1450. We've got Penn Gaming above 78. United States Steel, this had a monster move here from $11. Peloton as well above 100. It got as high as I think 150, nearly 150. But like I said, I'm very unique in what I do. I don't know anybody else that does this. I obviously have a code of ethics that I have to follow, and every official trade alert that I've ever sent out, I have logged on my website for full and open transparency. So feel free to go and check that out, see if the types of names that we recommend are the types of names that you like to buy. We do not trade penny stocks. We're not trading low float stocks that are in and out in 5 minutes, 10 minutes. Like I said, our work is geared towards a time horizon of weeks to months, and that's the way that we do things. But just to give you an idea of kind of what we're looking at here, some testimonials, 12-month performance. Now that's not typical. That was obviously last year. We were able to kind of get in and communicate ahead of the crash, and many of our members had ridiculous outperformance, but that is not typical. But this is Vince. He's, for the second year in a row, his trading accounts up 100% for the year, which that's ridiculous. Individual options trades 870% on an options play. Again, that's not really typical. There's obviously a lot of luck that comes into that. We've also got another member who started off with 40,000, got to 96, up at 160. So this individual keeps giving me updates of his account, and again, he's trading stocks only. We're not using massive amounts of margin or looking to get rich quick. It's a process. If you think of my work, probably more along the lines of technical investing rather than trading, I think you probably get an idea of the type of group, the community, the clients that I have and what I've built. But again, individual options trade 760% on the trade alert that we sent out for X. So that's really what we do and what my work is geared towards. So if you're looking to maybe get away from day trading, if you're looking to maybe learn technical analysis, maybe you're just too busy to filter through thousands of stocks, maybe you just want to be part of a community as well, maybe you like clean charting, whatever your deal is, feel free to go and check out our website. It's only $500 annually. We have limited membership numbers because I don't need the stress of having thousands of members, and I keep things small, and that's why it works. So I hope you enjoyed this. If you feel free to go and check out our website and give it a thumbs up and all the good stuff. But if you've stuck around to the end, thank you very much, and hope to welcome you soon. Thank you.